Hi guys, welcome back to our channel, The Resolved Cent, where we give you tips on financial planning, how to strive towards financial independence, and budgeting. Today we're continuing our first-time home buyer series with a video on everything we've learned during the process of purchasing our first condo.
So in the first part of this video, we'll talk about some of the steps we took to prepare to buy a house. And in the second part, we'll discuss the home buying process and share some tips on what to consider before you put in an offer. If you're interested in this kind of content, go ahead and give this video a thumbs up and subscribe to our channel if you'd like to see more videos like this. Now let's get into the video.
So step one in the preparation process is understanding the basics of personal finance. We believe this is a very foundational step because buying and owning a home is a long-term financial responsibility. For us, long before we even thought about purchasing a home, we were already practicing and building good financial habits like saving and budgeting and investing and learning about ways to prepare ourselves for home ownership so that when the time came, we would both be financially and mentally ready.
So step two is building an emergency fund. I would say the reality of becoming homeowners seemed a bit far-fetched until we seriously started building up our emergency fund. We didn't really feel comfortable putting such a large amount of cash saving towards a down payment until we knew that if an emergency happened before, during, or after purchasing our home, we would have the immediate means to cover it. Having an emergency fund essentially made us feel empowered psychologically to consider buying a home. There's some psychological safety in not spending the entirety of the cash available to you on a down payment and knowing you'll be all right financially after buying your house.
So step three is to understand how much house you can actually afford. It's common advice to not spend more than 25% of your income on housing, but depending on your income and where in the world you live, this might not be possible. But in general, the principle behind that thought is that you shouldn't spend so much on housing that you don't have anything else to live on. The term for that is being house poor, and we didn't want to be house poor. Although we could afford a more expensive house, we knew we had a limit on how much we wanted to spend on housing and still be able to meet our other financial goals. There are a few nifty calculators online that can help you figure out how much house you can afford based on your income and your current debts. We tried a few calculators, and our favorite was the mortgage calculator from Bankrate, and we will link to that in the description box below.
So step four is to review your spending and plan towards saving for a down payment. At this point, you should have a budget and you should be able to tell the areas where you can cut back a little in order to save a little more towards your down payment. Down payments typically range anywhere from 0 to 20% of the property cost, and the higher you pay, the lower your interest rate and total amount of interest you end up paying over the term of the loan. Some people might ask, what kind of account is best to save for a down payment? And the answer is, it depends. For us, we put all our down payment savings into a high yield savings account because we knew we intended to purchase a house in a year or two. For others, that time horizon can range from 1 year to 5 years, and depending on how long it is, you might opt to invest in the stock market or in other high yield investments. But that can be risky as the market can turn unexpectedly and you lose a huge chunk of your savings. A few people might opt for and obtain a 0% down mortgage, but for most people, a down payment is required. So depending on your income, past financial habits, savings rate, and how much disposable income you have, the process of saving for a down payment can take several months to a couple years. So it's important to maintain perspective and keep the end goal in mind. One last thing to keep in mind is there are other associated costs beyond the down payment that you'll need to plan for as well, called the closing costs. These typically include taxes, insurance, escrow fees, and other costs associated with obtaining your loan. So plan to save an additional 3 to 5% on top of your down payment to account for closing costs.
So step five is to check your credit and keep track of it. To qualify for a home loan and to get a good interest rate and good loan terms, you'll need good credit, a history of paying your bills on time, and a maximum debt to income ratio of 43%. Different loans and different lenders will have different minimum score requirements, and a higher credit score usually indicates that your lender can trust you to make your mortgage payments on time with no defaults. We both prioritize building our credit scores by opening new lines of credit, trying to make our payments on time and in full, and as a result, we built up our credit to the point where we felt comfortable applying because we were sure we would get a good interest rate.
So once you've analyzed your current financial status, reviewed your spending, and saved up for a down payment, you're ready to start house hunting. So it's time to move on to step 6, the last step in the preparation process, and that is getting pre-approved. A pre-approval is an initial evaluation of a borrower by a lender to determine whether they can be given a loan. With a pre-approval letter, you can understand how much a lender is willing to loan you, and this will boil down to a combination of factors: your credit score, your credit history, your debt-to-income ratio, employment status, etc. It's important to shop around with different lenders at this stage to ensure you get the best loan package. For us, we shopped around with 4 lenders, but the first lender ended up giving us the best interest rate, and so we went with them. Now we're done with the preparation process, let's dive right into the buying process. But before we do that, if you haven't liked this video yet, go ahead and smash the like button, it really helps our channel out, and hit the subscribe button as well if you'd like to see more content like this.
So step 1 in the buying process is to find a real estate agent, especially if it's your first time buying property. We can't stress this point enough. We found that having a real estate agent made the process a lot quicker and a lot smoother for us. And we were fortunate enough to find our agent through Zillow when she did a showing for one of the properties that we were interested in. And we decided to go with her because she was very nice. She explained concepts to us in a way that made us feel very comfortable. She also communicated directly with the seller's agent and kept the process going by keeping both parties informed regularly. And when we had our doubts or questions, she was able to steer us in a direction that was in our best interest without being too pushy. The best part about using our agent was that her commission was paid for by the seller and not us. So there was no cost to using her services for us, only benefits. And apparently this is pretty common.
So step 2 is to decide what kind of home you're looking for and what features are most important to you. Before you start touring any potential homes, it's important to at least have a sense of which things you're willing to compromise on and which things you aren't. Do you want a single family home with a big yard and an hour commute to work? Or do you want a smaller, newer condo with modern amenities close to the heart of the city? Based on the size of your household and projecting any growth in that size, what's a reasonable number of rooms to have? Do you want a newly constructed house, custom made to your precise needs? Or are you okay with a fixer-upper with enormous potential that needs a little more work? These are some of the sample questions you can consider as you picture what your ideal home should look like. For us, we knew we wanted to start a house with a reasonable commute to work, slightly bigger than our previous 1-bed, 1-bath apartment, but not too big, and it had to have the potential to grow in value over the next few years with a tiny bit of work in case we decided to sell. One question that often comes up is, when do you start your search? Ideally, people suggest to start looking at homes a few months before you're ready to buy. However, we found our place on the first day of looking at houses and put in an offer the week after. We were able to do this because we had a solid idea of what we were looking for, and the condo fit perfectly within our budget.
So step 3 in the buying process is to start searching for and touring homes. At this point, you should have found a real estate agent who should be making recommendations to you based on your budget and the features you've determined are important to you in the previous step. You can also browse listings by yourself on sites like Zillow and Redfin and schedule tours directly from those sites. Okay. Okay.
So step 4 is to evaluate and choose which home best suits your needs and make an offer once you're satisfied with touring houses. It's time to settle on one and make an offer. Your real estate agent will help you determine how much money to offer for the house, along with any conditions to ask for. Your agent will then present the offer to the seller's agent. The seller will either accept or issue a counter offer. Once you've made an offer and your offer is accepted in some cases, you might be required to make an earnest money deposit that typically counts towards your closing costs.
Step 5 is to order a home inspection. It's very important to have a trained professional inspect your property, as they know what to look for and might be able to uncover issues that might not be obvious to you, an inexperienced home buyer. Home inspectors are able to evaluate the safety and quality and overall condition of your potential home, and having a thorough home inspection ensures that you don't get stuck performing little repairs after you buy your home. For us, our home inspection report uncovered very minor issues, and we were able to get the seller to fix some of those issues or provide a seller's credit that went towards our closing costs.
So, if the home inspection doesn't uncover any major issues, it's time to move on to the last and final step, which is step number 6, and that's to close. This typically includes an appraisal by your lender to certify the price of the property, a title search to make sure that no one other than the seller has a claim to the property, payment of the closing costs by the buyer, and a ton of paperwork from both parties. Once all these conditions have been met and everything goes smoothly, the purchase will be completed and you'll be able to get your keys and move in.
That brings us to the end of our video. Thanks so much for watching. If you're interested in content like this, don't forget to like this video and subscribe to our channel below.
Let us know in the comments below if there's anything you'd want to know more about. We're happy to provide details and answer any questions you might have. Thanks again for watching, and we'll see you in the next video.
Bye.
Bye.